Welcome back, everybody. My name is Michael Burke, and today we are kicking off a brand new series of educational events around foundational strategy development and trading. This live stream course is a group of segments. We probably have 6 or 7 of these planned, designed to help you learn about strategy trading, developing trading ideas into strategies, backtesting those ideas, optimizing those ideas, and eventually automating your trading for hands-free trading. Really, everything you need to know about strategy trading. I'll be joined by my colleague, Tom Snyder, who's also has a lot of experience in this area. Tom, thanks for joining me.
Mike, it's my pleasure, and you're right. In my previous life, my previous careers, I've done a lot of back testing, a lot of strategy creation and analysis, all that good stuff. And to me, it's just a natural progression of looking at charts, looking at data, looking and seeing how the market works. And once you get an idea of, I noticed something about the market, you want to test that out, right? You want to see how would this have done had I acted a certain way when I see this set of requirements or conditions, whatever you want to call them. And, with the NinjaTrader platform, you can actually put those ideas into the chart and take out of the chart how you might have done, right? Systematic trading, taking that emotion out of trading gives you a little bit of sense of how you might have done as a trader.
Yeah, I couldn't agree more. So what we'll do, Tom, in this series is we'll talk about what makes up a strategy, right? We'll talk about how to build some robustness into a strategy. So that term to me is really important. You develop a strategy and you back test it. Maybe you do some optimization, but robustness is the concept of how well the strategy may do moving forward, right? When we look at a strategy, we back test it. We see how it's done, over some historical period of time. But what are the chances that that strategy will work the same way it was back tested moving forward? So being able to kind of look at different ways of determining robustness is really key, so that traders have confidence in the trading strategy that they're developing.
Right. And understanding what goes into that strategy can help you with some of the pitfalls or some of the um, nuances that you might not think about necessarily when you're placing a trade just on the chart trader or in an order ticket. But those actions, we have to think about that in terms of a strategy, how those are handled so that we can accurately represent how trading works looking backwards to get forward results. So it's not as easy as you think. It's actually quite, I think, a little more complicated than we know.
I agree, and that's what we'll try to do. We'll try to make those complications more simple, so someone has the confidence and to really try this and enhance their trading. So today we're gonna talk a little bit about the basic functionality of strategy trading in Ninja Trading, and then in the next episode we'll talk about what makes up a strategy, those components and elements of a trading strategy. We'll talk about, as we go through this series, we'll talk about performance reporting and evaluation, how to evaluate a strategy, what are the key performance metrics that you need to look at. We'll talk about one of the more advanced features in NinjaTrader, which is the strategy analyzer, which allows you to optimize the inputs around a trading strategy. We'll do automation best practices, and then you and I will get into kind of the nitty-gritty of developing different trading ideas, risk management, add risk management to our strategies, those kind of things. So I think there's going to be a lot of content here that you'll be able to really reach into. And if you want to start back testing, developing strategies in NinjaTrader, you'll have the tools that you need.
Yeah, I couldn't agree more. When I think of ideas and being able to test those ideas, when I came to this, it was print out the data, right? Export the data to an Excel spreadsheet, and maybe you were smart enough to, or the system was smart enough to mark in the spreadsheet where you had a condition fulfilled, and then you would have to go by hand to see, okay, I would have bought here. What was the price? Okay, when would I have gotten out? It might have been many lines later in the spreadsheet, and okay, now I have to calculate the difference. Was it positive? Was it negative? Very kind of time intensive, right? And this is just speeds so many things up, that it's worth putting the effort into learning how to do it, because that investment in time to do that pays much more in dividends on the way, on the other side of that. So I think this will be a course that might be a little dense in information, but it certainly takes your trading understanding to the next level, and it's worth it in my humble opinion.
Yeah, I totally agree with that. Just the research that goes into developing a strategy and back testing it gives you insights into the market. It gives you insights into price action that you couldn't get in any other way, because you get that performance feedback right away. So you suddenly see how a 5-minute strategy on a 5-minute chart can act very differently than a strategy on a daily chart. And so it gives you a lot of these kind of unique perspectives that you couldn't get on your own without being able to test different scenarios.
And to kind of go off on that, sometimes you might wonder why we hear about certain periods for a study. And I'm going to use the golden cross in the moving average, because we will be talking about that a little more. That idea of a moving average crossing another, and 50 and 200 are what you hear about on the TV news, or you might read about in an article. The question is, why 50 and 200? Well, with the strategy, an analyzer, with this idea of creating a strategy, you can not only see if that's a really good idea to use the 50 and 200, but the next question is there a better set of parameters? And like you said, Mike, a 5-minute strategy might produce very different results with those same parameters on a daily or a weekly or a 60-minute chart. So that's the benefit to me is, again, you can start testing what other people are saying about their studies, about their parameters, and say, you know what, I understand that somebody uses these parameters. Are they good for me? And that from there, you can get a better understanding of not only the studies about the market, but about yourself.
I completely agree. You touched on it a little bit about, how this all started, right? Where, before computers, all of this was done very manually. And then, as computers evolved and more advanced software, these tools became, readily available for the everyday person. And that's not to say that it's easy. Developing a custom strategy requires, being able to describe the rules to the computer, and that requires a programming language. So in that is often a barrier for a lot of people who don't want to do this, because they just don't want to learn programming. But there are a number of different ways that you can approach this without having to be a programmer.
Yeah, it's a little friendlier than, first glance, you might be, wow, taken aback. What do I have to learn? You know what? NinjaTrader does a great job of providing samples that can get you started, and I think keep you hooked enough that you have another idea, you'll be able to put that into your own strategy and analyze that.
And over the course of these segments, we will demonstrate how you can get your ideas into a strategy without necessarily having to do that programming yourself. So we'll provide some insights in that area as well. So we talked a little bit about the benefits here of strategy, trading and development. Maybe you can talk a little bit about just the overall process. How do you start? What are the different things that you do to get to that automated strategy?
Right. So with NinjaTrader, it's fairly simple. You know, when you have a chart up, and uh, we have an E-mini chart using the current front month, September. It's a daily chart. You could start with 5 minutes. You could start with a weekly, but we're starting with the daily. And it's as simple as right-clicking in the chart to get the menu. Now, you might be used to using this right click to put on indicators or change your data series, right? But there's one that's right underneath indicators called strategies. So strategies are kind of, I don't know what you call enhanced studies, right? So you find the strategies section, and if you've never used this before, you'll see 4 sample strategies. Now, Mike has created his own, so he has some extra. But these 4 strategies that you see start with the moving average crossover. That is a basic interpretation of moving average, and I mean that in a primordial sense, not a simple sense, but it's a basic way to use the moving averages. And all you really need to do, well, first you need to hit add. Now, what happens when you hit add? You'll see inputs on the right side. And these inputs you can change. They are fixed right now because they are a sample, but you can change the elements of the strategy. And Mike, if you want to talk a little bit about where you are right now.
So yeah, basically this is a moving average cross strategy. So when the fast moving average crosses over the slow, it's going to go long. And when the fast moving average crosses below the slow, it's going to go short. And you can adjust those two moving averages to whatever lengths that you want to test. And you can even optimize them to see which ones would be the most profitable. We'll do that in another episode. But right now, for example, I just want to look at a simple 3-bar moving average crossing over a 10-bar moving average. So super simple. I'm using smaller numbers here so we get a number of trades on the chart. And basically, it's going to trade whatever. And again, this goes back, Tom, maybe talk a little bit about the environment, right? So when we're back testing a strategy, this is done in a chart, and there's other elements, a symbol and interval.
Right, exactly. And remember, we're testing over data that has already happened. This is data sitting in a database. So we have to tell the software what kind of data are we pulling in. And we did that to some extent with the chart. We started with a daily, right? So it read from the chart that we were using a daily time frame. But also you have to tell it how far back to go. So it knows how much data to pull in. Um, I'm trying to see on this. Do we have that, Mike, right here?
So let's put the strategy on the chart first.
Yeah, no, that's a great point. Let's put the strategy on, and it's going to blanket it onto the entire chart.
Correct. And then we can adjust the data that's in the chart once the strategy's there.
Exactly.
So
Um,
here's the tricky thing, Tom, here in NinjaTrader.
yes.
Most important thing, you may want to make a note of this so that you don't forget it. When you apply a strategy to the chart, the most important thing to do is click the enable button here. If you put the strategy on the chart and there's no trades, chances are you did not check this enabled button. So make sure you check that, click apply, and click OK. And in this case, the sample indicator, Tom also puts the indicator on there so we can actually test to see if the trades are happening when we expect them to happen when the moving averages cross.
Right. And that enable is kind of like locking in your choices, right? So any change you made in that template that Mike had up, if you hit enable, it locks it all down so it can throw it onto the chart. And then it locks it in because when we do other things with it, such as analyze the data, we want to make sure that our chart is looking at the same results as we would when we actually pull the data out and we have another view. So we'll get into that a little bit later. What's interesting here is it not only puts the studies on there, but it also turns on the text feature of the chart. So you might not have that text feature on. It should turn it on so that it puts the labels and the text labels where the trades were taken in the test itself. This isn't where you actually traded, most likely, but this is where the sample strategy would have taken trades and recorded as if they were live had you followed along live as the data happened.
So that's a cool feature here. So once you have the strategy on the chart, you have it, you're trading in the simulator for the most part at this point. You're just beginning. You can watch the strategy evolve over time in real time. This is a daily chart, so it only updates once a day, but on an intraday chart, this would be updating as each new bar occurs. So again, this strategy is a reversing strategy. We talked about that. It goes long and short. There's no other exit criteria. There's no other risk management. It's simply a simple test showing you where it goes long and where it goes short as those moving averages cross.
And Mike, that's a good point. Each trade, because really you're trying to replicate what would happen in real life. And so when you go long, you're closing one position, let's say a short position, and then you're opening another by going long. So you actually have to go long twice. So that's why in every instance you see text here, you actually have two trades going on because it is a stop and reverse system. You're getting out of one trade, you're closing that position, and then you're going into another trade, whatever that direction the system will tell you. It'll either buy or sell, but it'll enact that trade at the same price as the close of the position. So it truly is a stop and reverse as it's set up right now.
Agreed. I'm just gonna take 1 minute here, Tom, to just adjust these two moving averages so they're a little bit thicker so that we can see them. It just takes a second here. And so here we can see more clearly the green line there is the slow moving average, and the goldenrod is the fast moving average. So that's the 3, this is the 10. And you'll notice that here, that goldenrod is crossing above the green. It's kind of in between these bars. So this is the trigger bar. Well, let's call it that. So this is the bar in which the cross occurs. When that bar closes, it generates a market order to be filled immediately. The first opportunity for that market order to be filled is the open of the next bar. And so there you can see a little blue tick mark at the open of that little red candle. That's where we bought, and that is where we also bought to close the short. So Tom was right. 2 orders go in and reverse the trade.
And I think you made a point, Mike, about the cross and the execution. It's important to remember crosses generally happen between bars, right? The only time you'll see a cross happen on a bar really is when the moving average values are equal to each other on that bar. But if it doesn't happen on that bar, it'll happen between bars. So it might look like our entries and exits are kind of, a little bit farther away from where we crossed. But really, Mike's point about we execute after we confirm a cross. That big red candle or green candle that Mike pointed out, that's not confirmed until the end of the day, even though it was a big bullish candle and we know probably this will cross. Anything can happen. This candle could have turned around and we could have uncrossed. We could have not have crossed yet. So we have to wait for that confirmation candle to finish before we even think about taking our trade on the next candle.
So in this case, we are evaluating the strategy at the close of the bar, and we're looking at daily bars here on the ES. So the bar must close, and once it closes, it evaluates the strategy to see if any orders or any conditions are true that would then be processed and executed on the next bar. So
Yes.
this could be a minute chart, and it could be calculating intra-bar. There's even the ability to calculate intra-bar for day traders. So there's a lot of functionality here that we have to cover, Tom, over the next few segments.
I agree. One thing too, Mike, there's an added feature to the chart that you enabled by putting the strategy on, and that is it's that line, right? The one that connects the bars that where you executed the trades to show the trend of the market from bar to bar.
Correct. So basically what you always see these lines. If it's a losing trade, it's going to be a red line. If it's a winning trade, it's going to be a green line. And right now it's going trade to trade because we're reversing. But let's say you have a profit target or stop loss, it's going to draw that line from your entry to that profit or target or stop loss line. So you can always see on the chart very clearly the duration of that trade on the bars exactly. All right, let's look at the performance of this chart, Tom. So all of the trades that we have in the chart here, if we just kind of scroll back, you can see all of these trades that occurred historically throughout the chart. I don't know why I'm having trouble scrolling.
And Mike, that's a good point. You could look at the performance trade by trade. If you're a visual person like me, it might be interesting to scroll back and just see, okay, was this trade? Is it a short trade? Is it a long trade? What was happening before? What was happening after? It might give you some ideas of how this system behaves in the trend that we're in, if it's consolidating, if it's a downtrend, an uptrend. It's a good thing to do. But, I think where Mike is going with this is if you wanted to find kind of a summary, right? I don't want to look at every trade and to find out if this was overall positive or overall negative to my P&L. We have tools for that.
Agreed. Agreed. Let's take a look at that performance report. So again, all of the trades here are compiled into a pretty comprehensive performance report. You right click on the chart, and right below strategies is strategy performance. You can have multiple strategies applied to the same chart. So that's why there's this little dialogue to the left here. We only have one. I'm going to click on that and click historical, and this will give us the performance of all of the trades in the chart. So there's that report, Tom. It shows you all trades, combining the long trades and the short trades, and it breaks out the short trades and the long trades from each other. Here you can see that the long trades here in the E-mini on a daily chart are well outperforming the short trades, and that's pretty easy to understand.
And it even breaks down the long trades in profitable and not profitable, right? Profits and losses, which is an interesting comparison. It's easy for us to understand what's going on here because we've been in an uptrend since October of 2023, maybe a little bit low, maybe October 2022. And so if we're looking back a year, that takes us past October of last year. So if you're in an uptrend, you would expect long trades to do better than short trades. It's that whole idea of trading with the trend versus contra trend trades. But it also, if you don't know that, if it's a new market to you, you want to test your strategy on a market that's unknown to you, or if you're looking at different time frames you're not as familiar with, this can give a good sense of, well, this strategy does well on both the long and the short side, or maybe it's just the short side. Well, now I want to see if we're in a downtrend. But the idea of how well it does with its winning trades and its losing trades in one direction is a pretty neat feature.
Yes, I completely agree. It's interesting, we also have the ability here, and I love this grid view of the performance. But a picture is worth 1,000 words, Tom, and I always look at the equity curve.
Yes.
So the equity curve really kind of tells you how this strategy is performed over time. Every strategy is going to have some drawdowns, but is it consistently making profits over time? That's really kind of what we're looking for. And that's what we're seeing here for the most part. And again, I want to point out, and I think you'll agree with this, Tom, that a strategy doesn't have to be long and short. You don't have to have a straight. If you're in a particular environment, a particular market where you only want to go long, that's a valid strategy. If you only want to go short, that's a valid strategy. So it really, you can tailor, your idea to the market that you want to trade.
Yeah, I agree. You can go long only. You can, this is, doesn't include protective stops. right? So if you want to limit your losses, we'll get into it in another segment, how you can add those protective features, or maybe there are different ways to get out. We're using moving averages to get in and out, but you might get in a trade with one setup and you might get out a myriad of ways, right? Multiple ways. So this is very basic. And for a very basic strategy, Mike, I'm kind of impressed that it looks the way the equity curve looks the way it does.
Well,
Um,
this is a factor of what you just said. We've been in an uptrend. So if you were to pick just random places to go long over the last year and a half, you'd probably have an equity curve very similar to this, right?
yes.
But to your point earlier, this isn't the way that people trade. They don't trade long, short, long, short. They find a setup and a filter and a trigger, and they go long, and then they manage that trade with maybe a trailing stop or a profit target or a stop loss. And those are the kind of elements that we will talk about in our next episode, is what makes up a trading strategies. So we'll look at things like the different components of a strategy, entries and exits, trade size rules. We'll talk about different ways that you can kind of build those rules and best practices on developing a strategy.
Right. And that's just the beginning. I mean, that's there's so much more planned with optimization. And then, the way I see this evolving, Mike, is we might even get into the point where we can help code your strategies, right? Send us an idea and we'll use it as an example, but that's a little bit down the road. We want to make sure that all the basics are taken care of so that you can start doing this on your own if you choose to. If you don't want to wait for every Friday, you can do this on your own.
Before we go, I want to show one other advanced feature that we'll be talking about later in the course, and that is the I'm going to go to the control center. Let me bring that into view. There we go. And if you go to new and strategy analyzer, this is another way that you can backtest your strategy outside of a chart. Instead of having a chart, you can select the strategy that you want to backtest. You have all the inputs. You can choose to optimize your strategy here. And it's just a much more efficient, much faster way of backtesting different ideas very quickly. And it has the strategy performance report built right in.
Yeah, it is a great interface. One thing also, we have the summary here. You can break this down to see the individual trades, just like you would with your own, funded account, right? You want to see how your trades were for this month. Well, you can do that with a strategy with this strategy as well. You don't necessarily have to. You're not limited to the summary. You could say, let me show each trade. And you could download that, or you could export it into Excel and do further analysis if you want. But just like our trading account, whether we're trading sim or with real money, has all these features of how to look at my trading activity. So does the strategy analysis. It's just paper trading essentially, but it's very sophisticated paper trading.
I couldn't have said it better. We are out of we are out of time. This has been fun. It went by too fast, but we'll be back next Friday talking about how to build strategies and the components of strategies. Thanks a lot, Tom.
Yeah, it was my pleasure. And yeah, it went too fast and I can't wait. I mean, this is really, to me, the fun part of trading and exploring what is out there. And I can't wait.